All right, traders, I wanted to discuss with you a very lucrative long-term swing trading to investment opportunity, and that's going to be on BBBY Bed Bath & Beyond stock. I have a very strong foundational history of trading this strategy that I've used on multiple stocks, along with this stock multiple times in 2022. With that being said, I'm going to link a playlist down below where you can see me profiting on this strategy both ways, swing trading BBBY stock last year using the same strategy. And I'm preparing and planning to do it again with this stock. So let's get into it, man. We just had breaking news come out. Wall Street has now said that we have a big investor deal for over $1 billion to avoid the bankruptcy on Bed Bath & Beyond. Notice how good things always happen to these stocks when they're at the lows. Notice how when BBBY was sitting at $3.90 in 2020, it went all the way to 55. Notice how BBBY was sitting in the fours, it went all the way to 30. Notice how AMC and GameStop, all these companies that people thought were going to go bankrupt, AMC was at 191, it went to 72. GameStop was at 64 cents, it went to $120, right? So this video is going to give you a better perspective on swing trading, day trading, and investing. That's what it's going to give you a better perspective on, right? So let's just kind of start off with some of the basics, and you can take some notes. This is going to give you, in terms of my kind of theory and style of investing, you can look at this as, and you can do this with anything, blue chips, anything you want. But I like doing it on stocks like this because they have huge upside potential. And if something has very, very big upside potential, you can do very, very well with a small investment. And all you need is like one of these to really hit. If I invested into 10 things that had massive upside potential and 9 of them didn't work, and I sized in accordingly on all 10 of those, all I really need is one of those to hit, man, because we've seen stocks go up 1,000%. We've seen crypto go up hundreds of thousands of percent from the lows. They're out there, man. So if you can just hit one, in a sense, you don't need a high win rate. But the beauty of this strategy is, man, it has a very high win rate. So first things first, man, you got to buy low and you got to sell high. If you're looking to enter a long-term swing trade, if you're looking to invest into a company, you have to buy low and sell high. So looking at the max available chart history on BBBY, you can see right here, the lows were at $3.59. It went all the way to $55. Then it went back to the lows, the best price possible, towards the 430s. Then it shot up to $30. Now we ended up cracking those lows and we hit new all-time lows at 133. And keep in mind, GameStop, a lot of these meme stocks, right? GameStop, a lot of these companies were going bankrupt. Bottomed at 64 cents, had a crazy move. AMC bottomed at 191, had a crazy move. It seems like the true ones that stick around, they all tend to bottom in that like $1 to $4 range. It seems like they like to bottom around. Another one I'm keeping an eye on is this Kirk stock. Kirk stock has a gap to fill, and it had a crazy move. That gap's at 20. It always recovers. I'm keeping an eye on this one as well. That's for super long term, though, not right now. Let's keep the focus on BBBY. And again, watch this playlist. So that's one thing. You want to focus on buying low and selling high. Now, in terms of stocks that I like, trading, I like trading a stock that has a strong, proven foundational history of always closing the gaps. So what I like about Bed Bath & Beyond is it always recovers. It always fills the gaps. It always has short squeezes. It has a proven history of having massive short squeezes, of having massive gap ups, of having massive gap downs where it opens up higher or lower than it previously closes. And then eventually, it could take months, it could take years, but eventually it starts to close the gap. That's what I love about BBBY. It has that history of having the volume, of having the massive short squeeze potential. You have a lot of controversy going on with this company, and what's good for a company is when there's controversy at the lows, when it's controversial at the lows, and now you're seeing that there's an investment deal of over $1 billion to avoid bankruptcy, literally towards the all-time lows, and you're starting to see that, ever since this hit 130, it just keeps on trying to push higher overall. And we have gaps to fill above at $11.80 and $18, right? So that's what I love about this stock. Now, in terms of the only thing that I genuinely hate about this stock right now would be this. There's gaps to fill below. There's a gap to fill below right here at 211. There's a gap to fill below right here at 160s. There's a gap to fill below at 130s. So like I told you, this stock always fills the gaps eventually. So it's kind of like a game right now. Which gap's going to fill first? That's all this really is. We have gaps to fill at very high prices. We have gaps to fill towards 23, towards 18. Not saying the highest ones are going to fill, but what I am saying is eventually the stock recovers and it does fill the gaps. That's what it loves to do. So it's kind of like you're playing a game in a sense with bullish confirmations. You're looking for bullish confirmations towards one of these gaps that are waiting to fill below for a reversal. So we're looking for the stock to reverse at one of these gaps. See how there was a gap to fill at 207 and then it closes the gap and it starts to form support with bullish candlesticks. Then it blasts off again. That's what we're looking for. We're looking for bullish confirmations. We're looking for consolidation. We're looking for bullish trend reversal candlesticks towards the daily chart on the daily candlesticks. That's what we're looking for. And the gaps that I'm looking at right now are at 305 and $2.82. The lower the better, but we have to take it one gap at a time. And what you need to understand is if these gaps react as a resistance level, it's going to start to go to the next gap. If 305 reacts as a resistance, it drops to the next gap at 282. If that reacts as a resistance, it drops to the next gap at $2. If these gaps react as support, then it goes back to the next gap. That's what it's going to start to do, right? But there's going to be a crazy play coming up on. So I wanted to put this on your radar and kind of help prepare you in terms of what it is that I'm looking at. So I want you to take a look at the monthly chart. The monthly chart has become very, very interesting to me. So another thing, when I'm looking to do a long-term swing trade, or if I'm looking to invest into something, I'll look at the longer-term time frames, and this is something that I really don't do when I'm day trading. Day trading, I usually look at the daily chart, one-day candle, and the 30-minute chart, and the one-minute chart. But look at the monthly chart on BBBY. Look at this. You see how it has these three slanted red candlesticks, then it forms this bullish trend reversal candlestick, then it just goes nuclear. It has a massive squeeze from 4 to 30. You see that? Look at what it's doing right now. It has 4 slanted red candles. You have this bullish trend reversal candlestick at all-time lows, and you guys know the biggest squeezes get created when stocks are at their lowest and when things get ugly. When it gets that low, they just don't come back to the lows. They tend to recover, and they tend to spike very, very big. And look at this. Slanted red candles, bullish trend reversal candle on the month, bullish trend reversal candle on the month. It explodes like crazy and then it collapses. What did it do today? It ended up exploding like crazy, then it collapsed. But this is one of my theories. One of my theories is it's not over yet. One of my theories is it is not over yet and it's going to try to recover to 586. The reason why I would say that is we have this positive news. And like I said, it tends to have the best reversals when it hits its lowest price. And 127 is pretty damn low if you ask me. And another reason is, look at what it did last time when this happened on the 1 month chart. Last time this move occurred, this pattern that I'm pointing out, it had a massive squeeze. The squeeze was crazy. This went from 486 to $30. And it had a massive breakout above the previous month. BBBY hasn't really had a massive breakout above the previous month. If it breaks above 6 and turns 6 into a support, it's going to go fucking nuclear. This thing is going to have a massive breakout if it does that. But the point I'm making is this just had a massive gap down in after hours, right? So it's going to look bearish. When it opens up, if it maintains lower, it's going to look bearish. And what they're going to try to do is they're going to try to flip it to bullish because the real move looks like, based off this history and this pattern that I'm showing you, it's going to be bullish. And then when it looks super bullish and breaks above it, then it flips bearish again and starts to sell off and traps the bulls, right? So what I'm looking for based off that pattern that I just showed you in the monthly chart, I'm looking for a consolidation, a floor to start to form towards the gaps. And the ones that I'm looking at are at $3.05 and $2.82. Those are the levels that I'm looking at, right? Very, very simple. I'm looking for consolidation. I'm looking for bullish trend reversal gray doji candlesticks. See how it forms the gray dojis at support, then it starts to spike. That's what I'm looking for. Bullish consolidation, small little breakouts, trend reversal candlesticks at higher support, right? Another thing I will look for is in terms of a momentum play, when BBBY finally gets some volume and it starts to spike above the breakout. So we don't know where the resistance is going to be yet. We have to wait for things to develop. We're going to go over this all in Trader Society and bank on this. But once it starts to form a little channel, like right here, the channel was 312 to 330. So how would we take advantage of this? Well, you can look to buy the dip towards the gaps if it looks bullish, but another way to take advantage of it is to buy the breakout. And this is how I would buy the breakout. You identify the resistance. The resistance is at 330. Okay, it has a massive breakout above 330. It's bullish. When it instantly drops back, the first time the initial reaction to the previous resistance at 330 reacts to support, forms the dojis, it's bullish, buy the dip at the previous resistance. Wait for it to break out first because it could be a fake out. If it has a strong, nice little breakout, wait for it to instantly crash back down. Previous resistance reacts to support. If that's the new floor and you see it consolidating, breaking out, then you buy the breakout and look what happens. It blasts off massively. That's how I would trade it in a momentum breakout sense. As for a buy the dip at a lower, better entry, you need a strong floor. You need consolidation. You need to see small breakouts. You need to see higher support forming. You need bullish trend reversal candlesticks. You need that on the intraday chart when you're day trading. Now, if I'm swing trading or if I'm investing, I need bullish candlesticks on the daily chart. The daily chart candles close at 4 p.m. when the market closes. If it looks like it's forming a bullish candlesticks right here, it closes the gap. You have a nice wick coming in. The buyers are showing up at the gap. Bullish candlestick the next day, consolidation, higher support. If it starts doing this bullish floor confirmations, then I will look to swing trades. For those of you asking about swing trading, you have to wait for a bullish trend reversal candlestick to form. You have to wait for bullish candlesticks to form on the daily chart. I'm not buying into bearish downtrend candlesticks on the daily chart. I'm buying into floors. I'm buying into bullish trend reversal candlesticks. I'm buying into when gaps fill and form bullish green candlesticks. That's what I'm doing. Higher support, trend reversal candlesticks. The wicks are showing up at the gap, right? That's what I'm doing. So for those of you asking me about swing trading. In the day trading, I already told you, I'm looking for intraday, strong bullish candlesticks at the gaps, and I showed you how to play the breakout. And in terms of the dip levels, I'm keeping an eye on are 305 and 382 for scalps, right? But what I just want you to understand from an investment perspective, this is what I like looking for. I like looking for something where I would be extremely terrified to short at the lows. Because if you just look at the history, right? Who am I to sit here as a short seller, as a bear, as someone who loves buying put options and say that it's going to get new lows, it's going to go, to bankrupt, history's not going to repeat itself, it's not going to have the massive short squeeze, it's not going to fill the gaps. Look, buy low, sell high. Who am I to bet against the all-time history on BBBY? I'm onto something, man, with this strategy because I do it and it consistently works, and I do it with investing as well. It's not by accident that over $1 billion comes into BBBY at the lows to avoid bankruptcy. That doesn't happen by accident. Do you think $1 billion is coming into BBBY when it's at $40 and $50 and when it's filling all these gaps that are waiting to fill above? No. That's where all the smart people are selling out and then they're buying here. All the millionaires are buying here. That's where all the millionaires are buying, right? So I want you to combine this mentality for those of you who are investors and just love bag holding. And when something drops 50%, you just love holding and hoping and adding whatever it is that you're doing. I want you to think about this. You need to wait for the best setups at the best prices. A lot of you who are investors, I can really help save you in that sense because I get the best entries possible. I do it for day trading, I do it for swing trading, and I do it for investing. With that being said, it's very rare that I come across lucrative trading investments within this market. In terms of who will have my full guidance on this play in real time, it will be the people within Trader Society 100% real time. I just want to help you in terms of the education and kind of give the plan that I have out right now. It's going to be constantly updated. This is another remark that I want to make towards investors. So I already made the remark. You need to be buying low. You need to be waiting for the bullish confirmations at the gaps. It's a gap close reversal where the gap fills, it starts to reverse, then it pumps back up to fill the gap. Then you need to be scaling out. You need to be selling into rips. You need to be scaling out into the gaps. There's a new gap to fill at 586. If that reacts bearish, you sell. And in terms of a day trade, if you ever see a floor at 6, it's going to have a very, very nice move and very, very nice breakout. It's going to go nuts. I'm telling you, man, look, in terms of day trading, look, man, I'm going to kill this. I'm going to settle it right here at $6. If it breaks above 6 and forms a floor, it's going to go parabolic. It's going to rip to $12. It's going to go absolutely insane. Now, you must identify if it's bullish, and you must get stopped out quickly. If it drops back to $5.50, then you get stopped out. That's one play. That's a breakout play. That's going to take time. Hold off on that. It's going to probably react bearish. If it forms a roof at 586 and close the gap, it's going to react bearish and get absolutely crushed. I'm just saying, once it has that momentum and breaks above 586 and goes to 6 or 7 and then pulls back to 586, then I'll buy it. That's what I'll do. But look, I'm going to set my alerts. I'm going to set my alerts right here at or below this, level right here. I'm going to set my alerts, man. I got the best setups to the best prices aligned. These are the levels that I'm looking to trade at, right? Now, this is the remark that I want to aim towards investors, right? So when you're investing, there's a couple ways to do it. What I would like to do is I don't dollar average my costs. I think that's a very poor and stupid strategy. I think if you're not using technical analysis with your investments, then you're making a poor investment, because these charts are going to help give you guidance in terms of where the best entry is possible. That's what's going to give you guidance. Well, where's the best price to buy BBBY? Oh, right here, the investors got the biggest return at 366. So if it pumps to 55 and instantly drops back in time to $3.66, yeah, you should probably start buying the stock. But if it just forms lower highs, it's going to try to go lower. And if it already worked here, it's not going to try to continue to work, right? You got to do it when people aren't anticipating it. But anyways, my remark that I'm going to make to investors is this: you cannot hold and hope. You must get better entries. You cannot rely, if you're trying to hold and hope and you're trying to join a community of people who are like, yeah, let's just hold the stock, man. They're all losing money, man. All those people who are holding and hoping, they're not your friends, all right? This is, in a sense, this is kind of like a Ponzi scheme. You can think of, in a sense, on the games they play with these short squeezes. All those people who own those big communities of chat rooms and they're pumping all these stocks and stuff like that, those people who are telling you to hold and hope and to buy high, keep buying it up, keep buying high, they're selling you their shares, and the SEC is hunting them down. That's where those people are right now. All those massive followings you've seen with AMC, a lot of them deleted their videos. You've seen it happen with a lot of small cap stocks and penny stocks, right? While they were telling you to hold and selling you hope, they were selling because they bought at a good price and they looked at the chart and they said, wow, this is very high in price. And historically, the stock goes lower. So I'm going to sell while it's high. While all these suckers are buying high, I'm going to sell my shares to them. Where they fucked up was they told people they were buying it to pump the price when they were actually selling it. And that's where the SEC got down on them, right? So what I want you to understand is you must be self-sufficient. You must understand what it is that you're doing. You must not hope and hold. You must avoid these communities who are pumping these stocks. Anyone who's telling you to just hold something and hope and don't worry, it's going to come back and we'll just add more here. These people are red flags. Avoid these people at all costs. So what I want to tell you is this. Look, man, if you were to invest into this stock, if that's what you want to do, if you want to buy this and hold it for a very, very long time, there's different ways to invest into a stock. If it looks bullish at $3 and you buy it, then it looks bearish, you can sell it for a loss of $2.50 and try to get back in at $2 or at $1.50. That's what you could try to do, because your average is everything. What you need to understand is the average you are in at is everything. If you buy a stock at $1 and it goes to $20, that's a 2,000% return. But if you buy that stock at $5 and it goes to $20, that's a 400% return. Big difference. So imagine, instead of holding and hoping, you kind of cut your losses quickly and then you got back in at a much better price. So that's one way to do it. This is why I would tell you, and I got people who didn't understand this when I first started my YouTube channel. I would literally buy a stock. It would look super bullish. Then I would sell for a small loss and I would change my point of view, because I react and I adapt and I change with the charts. If the chart says it's bearish, then I need to make a decision. Am I going to hold? And if I hold, where am I going to average in more at? Where's my level where I'm going to show some interest in averaging it at, right? Because if I'm holding and hoping, what I want you to understand is I'm never full size. So another thing you could do is you could say, you know what? I like $3. It's a great entry. I don't care if it goes lower. I don't care if the chart looks bearish. I think $3 is a great entry, right? If you do that, this is what you need to understand. The average is still everything. If you buy it at $3 and you want to invest $1,000, you should put in 50%, initially 30 to 50%. And then do not average your cost down. What you should do is wait for it to drop 30 to 50%. If it drops 30 to 50%, then look to scale in 30 to 50% of the money you left aside, just in case it goes lower. That way you have a great average, right? That's what I want you to do. So if you're going to hold and hope, you need to say, okay, if this stock drops 50%, I'm going to be able to have a very, very good average, because I'm planning to invest $1,000 at 3, and if it drops 50%, I'm going to put in, $1,000 more at 150 to get me a very good average, right? That's what you need to do. So if you're holding and you're hoping and you don't give a shit about what the chart looks, and you don't care if you're down 30 or 50% or whatever, then you need to take a starting position of 30 to 50% of what you plan to invest. And you only add the rest of the money if it drops 30 to 50%. So another thing I don't believe in is dollar averaging costing. I believe if I'm buying something and holding it, even if the chart looks bearish, I don't care if it goes lower, I believe you should wait 30 to 50% of more of a crash, especially in this volatile market, then you should scale in. I don't believe in dollar averaging your cost. I believe in a 30 to 50% drop, right? So there's kind of two ways to go about it. You can go about it as if, you know what, I'm going to get in here. If it goes against me like 10%, I'm going to cut my loss and I'll look to get in when it looks bullish again, or I'll look to get in at a much lower price, no holding and hoping. Or you can say, you know what, I think this is a great deal. If the chart flips bearish, I'm not going to sell. I know it's bearish, but I like my entry. I'm going to take a starter position if I'm holding and hoping into a bearish move, if it flips green to then bearish. And then I'm just going to add in 30 to 50% of what I added initially once it drops 30 to 50%. That's what I would tell you. And I would tell you to make a choice ahead and to stick to a plan, whether you're going to kind of hold and hope, or are you going to adapt when it looks bearish and you're down a little bit to cut your loss and then look to get back in when it looks bullish again towards that price or at a much lower price. That's what I would tell people and kind of pick a side in a sense. And if you're wondering, well, whoa, what are you going to do? Are you going to just buy it and hold it? Or are you going to get in at a specific price and then just cut your loss and look to get back in? Me personally, I'm not 100% sure, but as of now and the way I do this, I take it one day at a time. I take it one day at a time and I trade the charts. And what I will tell you is whatever the most logical decision that the chart is telling me, that is what I will do. And I cannot see the future yet, but what I can see is eventually this stock will likely go back into the fives eventually to $6 range. And like I told you, if it has a massive breakout above 6 ever and then pulls back and reacts as a support, you can then buy it once it has a massive break above 6 and reacts to support. Initially, they're going to try to turn 586 into resistance and crash it initially, but then eventually it's going to try to break above 586. Once it breaks above 586, wait for the big pullback. When it retests 586, then you buy it, right? But right now, we're focused on the short term, so let's focus on the calls and going long towards these lower levels if it looks bullish, and then the puts going short if it looks bearish at 586. But once it breaks above 586, that's when we wait for the pullback to 586, then we buy at 586, right? So those are some things that I want you to put on. Those are some things that I want you to bring awareness. And remember, in terms of investing and anyone you follow, a huge red flag are these guys who are telling you, just hold it. It doesn't matter if we're down 50%, if we're down 80%, if we're down 90%. Well, if you have no risk management and if you have no plan, then yeah, it matters a lot. If you have a $10,000 account, and you're putting in half of your account into one stock and it drops 50%, yeah, it matters a lot, even if you're holding for 20 years. It does matter a lot, right? You must have risk management and you must understand starting positions. If your strategy is to hold and hope just because you like the price and you're not going to trade the chart, then what I would tell you is make sure you only size in 1/3 to 50% of what you plan to size in. So if you have $1,000 to invest into that stock, that's your plan, and you don't give a shit about the chart, you like the entry, you're going to hold and hope, fundamentals, long-term, blah, 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 then I would tell you just make sure you put in 30 to 50% of what you'd like to put in. Then when it drops another 30 to 50%, just add the rest. That's what I would tell these people, right? If you want to be a little bit more logical in a sense, then trade the chart, but don't get too micro focused in a long-term investment. Don't try to nickel and dime it. If it's at a great deal, then yeah, you can hold it for a little bit, right? It's very hard to time, the bottom of an investment perfectly, which is why the entry is going to be a huge key. But if you get a great entry and it goes against you a little bit, you can just kind of get stopped out and then just get back in at a lower price or when it looks bullish again. Or you can just take a starter position, and if it goes against you 30 to 50%, you're fine because you'll have a good average, because then you could add back to 30 to 50%. That's what I would tell those people. And always remember, huge red flag to these people who are saying, holding, hoping, who are telling you to buy as it's going up. If something is skyrocketing and they're pushing buy, I can assure you these same people are selling their shares to you because they bought low and they need suckers and buyers to keep the Ponzi going, right? So you just have to get in before the Ponzi scheme takes off, right? You don't have to be the first one to get the trend. You don't have to be the first one in on a Ponzi scheme, but you do have to sell into the rips and buy low into those key dip gap fill levels and then kind of play for the gap fills low, right? Just don't be the sucker, man. Be very, very careful. So look, man, I put it on your radar. From here, we got to wait for something to develop. We got to wait for confirmations, but I want to bring awareness to it, and I want to help you teach you this in a sense. Make sure you watch that video. I'm going to link it down below. I'm going to link that video down below, man. It's a playlist of my history with BBBY, and I use this on day trades, swing trades, and investments.